There's probably no more an important topic in trading than risk management. But a close second to it is how to decide which symbols to trade. And that's why what I teach in the Sector Secrets Mastery is what we trade is actually more important than how we trade it. The how could be playing momentum, right? Obviously, momentum is one style of how. Buy the dip is another style of how. There's so many ways to get into a trade, but what we're all looking for, whether we're trend followers, breakout traders, is we're all looking for continuation. If you've sold premium, and let's say you sold a call, sure, if price moves in a range, that'll probably be enough for time decay. But if you've sold a call and price moves lower, now you're really cooking with gas, right? So we all, to some degree, do rely on direction. Now, if you're a long call, long put buyer, I call that directional debits, right? And I think most traders are directional. We're looking to buy low, sell high. But what we're looking to buy low, sell high matters. So let me use a recent example, and then I'll walk you through the process of watch list building, what to trade 101 in this video. First of all, anytime I'm looking at right now, filming this in August, in the midst of still an overall uptrend in the indices, one of the first things I will say is paying too much attention to the indices is usually a mistake. What we do want to make sure is we're looking at overall strength in the indices, overall strength in the sectors, and then relative performing stocks within them. So that's the first part of what to trade 101. What is it that we're going to trade? So in this case, this is an XLU trade that's open right now in the Sector Secrets Mastery. And what we did here with this one, just to give you an idea, is we looked at the overall strength, right? And even though it's a little bit more choppy than it was just a couple sessions ago, this is still predominantly an uptrend. And the way that I determine that is by the color of the candles. These are top tier candles measuring momentum, trend, and participation. Green means bullish, any shade. Dark is a down close. The lighter shade is an up close. That's the only difference. So if I have nothing but green candles on the screen, I'm not going to buy puts unless I hate my money, which I know if you're watching this video, you certainly do not. The next idea was what support level would I buy it from? All right, well, in this case, we bought from the support level of the Darvis, and that's where we bought calls. In this case, the 83 call. I paid $3.25 or $325 per contract. Right now, those calls are trading at, I'm going to check right now, those 83 calls are trading at $3.80. All right, so again, just a nice start to the move. I'm looking for at least the midpoint, if not a retest of the resistance and the upside. So this gives you one style of trading I'm looking for and how I build my watch list. So let's get into the watch list, what to trade 101. So again, watch list building is 80% of trading. If we don't have a process to determine of a sea of stocks what we're going to trade, we're going to be lost. We're going to be distracted and FOMO into every headline, into every gap up, into every candle that's a large one where one stock is having a good day but may not continue. So let me show you what I send out to members. So this is every Monday. What we do is we determine what are we going to trade this week, and we narrow it down to a ranking to find the best setups. So think of it as ranking the symbols most likely to continue, and we start off with sector relative performance. So right now, this week, gold miners, home builders, metals and mining, airlines, healthcare, and industrials are the month-to-date top 6. And I threw a couple in for honorable mention, XLU, which is the trade on your screen, and XLC. Now, if I look at a 1-month performance, so that's the difference between the 19 days so far in August versus the last 30 days, but you'll notice very similar sectors. Home builders, gold miners, metals and mining, consumer discretionary, communications, and there's, once again, XLU, utilities. So you can see why we're in the XLU trade, and it comes directly from this. Now, let's say you didn't want to trade XLU, and for example, the first stock here on my list, Duke. Let's say you say, you know what, I really like Duke. It's a relative outperformer. I want to trade the stock, not the ETF. No problem. 6 of one, half dozen the other. So here we have a mean reversion within the context of a trend. Once again, predominantly green candles. Now, when we have a mean reversion, I'm not going to be surprised by 1 or 2 yellow candles, but as long as they're happening in a trend, that's absolutely fine. So much like XLU is moving higher today, so too is Duke. The idea is to buy it when it sinks down into these 3 lines. That's my mean reversion. And the expectation is the trend continues. Buy the dippers are not just buying something because it's cheap. That's an absolute recipe to failure. Buy the dippers are not just trying to pick a bottom. Again, recipe for failure. What we're doing is we're looking for things that have been generally moving higher and they go on sale. Now, there's actually 2 sales on this chart, just not to show a well-chosen example. The most recent one is here. The one that preceded it, right back in here. In fact, this one also, as you can see, had a little bit of Darvas support, just like the previous XLU that I showed you. So this is what we're doing. Now, here's a really important tip that I would definitely think about. For most traders, they're looking at what is the setup. Well, I have 3 setups. It's really simple. 3 core setups. Do I have a Darvas? Do I have a mean reversion? We call that a wave entry. Or do I have a daily price movement range? And that's specifically for swings. That's it, right? After 30 years, I've said, you know what? These 3 things keep my pipeline of opportunity full. And if I start to get above 3, a buddy of mine taught me a long time ago, if I hand you a bowling ball, he said, you'll hold the 1. If I hold you a second bowling ball, now you'll manage that one too. I hand you a 3rd bowling ball, now it's getting tricky, but you can manage that. I hand you a 4th bowling ball, not only are you going to drop the other 3, you're going to drop that 4th one too. I think that's the way the mind works. Something about 3 works just fine. And this way I'm not swimming in too many opportunities and worse, conflicting opportunities. So if you can narrow down your process to the 3 best. Remember, we can't have 14 best, right? We can't have 7 best. You're really going to find you have maybe 2 or 3 entries that are the predominant reason you're having winning trades, or the winners that you have are probably just 2, maybe 3 setups. These are mine. But it's not just about the setup. That's step number 2. The number 1 step is exactly what we're talking about here. Start with the watch list and let that be a relative performance watch list. Now, relative to what? Relative to all the other sectors out there. Relative to what? Well, once you've narrowed down to a specific sector, what are the strongest stocks in that sector? Now, not all strong, right? Some are stronger than others. So it's constantly a comparison. I may not always find the follow through. These are probabilities, gang. Obviously there's no guarantees in trading, but I do know this. If you start with the strongest sectors, you move on then to the strongest stocks in the sectors, what you will have built is a ranking of the most probable follow through in the market. And that is absolutely the way in which we want to think about what we're going to trade. Then go back to your setups. If you need some setups, we'll definitely teach you here in the mastery. But if you've got setups you like, find the top 2 or 3 and only look at those. That focus, that ability to say, this is what pays me and go all in on that is what disciplined traders do. So there you have it. What to Trade 101.